Good afternoon, everyone. You are officially on the market with Val, and today I want to talk about the pre-approval process of getting a home. Okay, most people, dream of home ownership. Everyone shares in the same American dream of one day having their own home, the white picket fence, and having a piece of property or multiple pieces of property for their family and to pass on generational wealth. All right. So I want to walk you through the initial steps because a lot of times I run into people and they don't know the first thing about buying a home. So it's a process. It's not a very difficult process, but it's a tedious process. Okay. So there's three major factors in acquiring a home. Number one is having a decent credit score. Anything over 640, you can get approved. I mean, there's other programs that will allow you to get approved for under 640, under 650 credit score, but the interest rates will be higher. Maybe you can refinance later, but that's for another video. So first thing is maintaining a decent credit score so that you're attractive to lenders, to banks, to mortgaging companies. You're going to be putting down a certain amount of money, which will cover your closing cost and your down payment towards the home. Banks want you to be financially vested in the deal. And a lot of times, if it's FHA, which is a government-backed loan, they'll require 3.5%. If it's a conventional loan, usually it's 5% down, including your closing cost, okay? Then there's veteran loans. There's different type of loans, USDA loans, there's special loans, but primarily, most people will be qualifying for a FHA loan or a conventional loan, okay? So your credit score is important, at least 2 years of work history, okay? Banks are gonna pre-approve you for a loan. They wanna see that you're consistent with your job. The longer amount of time that you have been at your job, the more attractive you are to banks. They're looking for security in the loan. They're looking for people who can keep a job. And if you're moving from jobs, usually they want you to be in the same field. So for instance, if you're an electrician and you're moving from one electrical business to another, that counts. It gets harder when you're self-employed. They ask for additional documents, but I'll keep it basic. That's for another video also. So they ask for good credit is required, 2 years of income, 2 years of employment, and also a decent down payment, okay? So, they want to see that you have some money saved, that you're able to save some money, and that you have reserve funds to put down on the purchase of a home. Again, usually it's 3.5%, or it could be 5%. The more that you can put down towards the home, the better it is for you, the cheaper your monthly mortgage payment will be. And it's attractive to the banks when they look at a bank account and the person is capable of saving money. They know that you're a serious buyer, that you've been saving to buy a home, and they usually look at it as less risk, okay? So again, the three factors are decent credit. You should be working on your credit. I tell people a lot of times, just because your credit might have an issue today, but that doesn't mean if you pay your bills and you stay on it, within 6 months, you can be in a totally different place credit-wise, and you can be able to, acquire a loan. 2 years of work history or more, the more work history that you have, consistency at your job, stability, the more attractive you look to lenders, okay? And the third, last but not least, is having some reserve funds. You can take money out of your 401k and not get penalized for first-time home buyers. You can save money with your significant other. Whatever it is, if you inherit money, it's good. Whatever it is, those are the three factors. After that, you speak to a local realtor. He'll help you. Usually, if he's a good realtor, he'll have relationships like myself. I have a relationship with different lenders. He can share with you information about his lenders, and you get pre-approved. Now, what I always say is when you're starting to look for a home and you decide on a realtor, it's usually in your best interest, or it's a good idea if the realtor suggests a lender and you can work together because it's sort of like a triangle, right? You have the realtor, you have the buyer, you have the lender, and you guys are working together in conjunction to get you approved. A lot of times when you use a lender who's not familiar with the realtor, they may not be on the same page, and I never suggest using an out-of-state lender. If you're buying in New York State, it's probably best to use a lender in New York State. If you're buying in the state of Pennsylvania, you want to use a lender in the state of Pennsylvania because they're familiar with the local laws. They're familiar with local programs. I can't tell you how many times people have reached out to me and they have lenders from other states, and that doesn't always turn out well. For me, since I'm seasoned, I usually can connect the deal or make things happen, and I stay on top of it. But a lot of times those deals, when you're using lenders from different states, again, they don't know all of the local laws. They don't know the local programs. They don't know the market. They don't know the local market that you're buying in. And you want to work with someone who's seasoned in the local market, who has relationships in the local market, who can help you get through the deal and make the deal easier. And that's not always the case when you're using someone who's a outside lender. You want to use local lenders. You want to use realtors who know who have a lot of relationships with lenders. And you know, if you do choose a realtor and you do trust them, let them help you in picking a lender, because they do this every day. They do this. This is their profession. They have a lot of relationships. Just like in your job, you have a lot of relationships. They have relationships, and most of the time they'll be able to provide you with a lender that will walk you through the process and make it a smoother deal. You want the relationship between your lender and your realtor to be close enough that if you need to make an offer at 6 o'clock on a Sunday, the lender is going to pick up the phone call for the realtor because they have a relationship. You're never going to get that from a bank. Banks are Monday through Friday. By the time you put your deal in, someone's already got an accepted offer. So keep in mind, reserve fund, credit, and stable work history. Those are the three factors in purchasing a home, and then relationships. A relationship with your realtor, a relationship with your lender. Try to make sure you use local lenders who have a relationship with the realtor, people who know the market, and it'll make your home buying experience a lot better. Okay, so those are the main factors. I just wanted to get up here and share them with you. When buying a home, regardless of what state you're in, you want to use local lenders. Okay, if you have any questions or you have any comments, leave them. I'll be sure to answer them. You can email me at valentinesales@gmail.com and ask your questions. If there's any videos, is there any topics real estate related that you want me to touch on, email it to me and I'll make videos on this. You are officially on the market with Val. If you like this content, like, share, subscribe, and leave comments. Have a good day.